At some point, then that'll force the Fed's hand, and then that's when it's going to be a boom again for you and me and everybody in the precious metals. But for now, it's just really ugly, and it's like I said, not just in the markets, but societally, and I really feel for the people that all this Fed stuff and what they've done to us over the last 13 years are now really having a negative impact.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Craig Hemke from TF Metals Report. Craig, thank you so much for joining us today.
Yeah, Elijah, it's always a pleasure. Good to see you, my friend.
Well, it's great to see you. We haven't had a lot of action in the markets this week, so you're taking what's happening.
Oh my gosh, what a week this has been. I don't know, where do we even start? It was just 8-9 months ago that the Fed was still talking about no rate hikes until 2023, and some saying nothing until 2024. And now there's this mad rush. I don't know, Elijah, it just drives me crazy. The media treats, and the investment community treats all these people at the Fed as if they walk on water, they're the masters of the universe, when clearly they're not. None of them have held jobs outside of the Fed. They're just these theoreticians and academics, and they're wrong all the time. And yet, we're supposed to believe, oh yeah, they got it right this time. The most interesting thing that happened was about 5 minutes into Powell's press conference, when he came right out and said, well, this isn't really a plan, because no one can say for certain what's going to happen in 6-12 months from now. No kidding, really? When he said that, the dollar took a nosedive and the precious metals rallied. This is a really tenuous time, Elijah. Besides all the economic stuff and the vast majority of Americans getting just stretched to the point of breaking, you've got political stuff. We're all waiting on the Supreme Court stuff later this month, and pending midterm elections and food crises. So, the markets do what the markets do. I would suspect the stock market's got further to fall. I've been writing about that publicly for the last couple of months. We're getting close to my first target, which was the 200-week moving average for the S&P. When I first started talking about that, the S&P was about 4,400. That thing's down at 3,500, and we're only about 150 points away now. And there's a chance we could go quite further than that. At some point, then that'll force the Fed's hand, and then that's when it's going to be a boom again for you and me and everybody in the precious metals. But for now, it's just really ugly, and it's like I said, not just in the markets, but societally, and I really feel for the people that all this Fed stuff and what they've done to us over the last 13 years are now really having a negative impact. It does seem like
a lot of things that we've been talking about for many years is really coming true. It seems like, unfortunately. And what's interesting is that precious metals have held up for the last couple of weeks, kind of just gone sideways as we've seen the stock market tumble, and we're on track this week for the worst week since 2020 in the stock market. So your take on that, how metals have really just kind of gone sideways for the last couple of weeks?
Yeah, we can always cherry pick dates, right? The Bitcoin people and the people that hate gold always cherry pick dates to try to make gold look as bad as possible. But I can do that too. And in this case, let's just look at year to date. Right now, as we speak, gold's up 1% year to date. Now, if you had told me, given the predominance of machine trading, algorithm trading in gold futures, and how they're keyed to, play off of the level of interest rates and real interest rates in the dollar. If you had told me back on the 1st of January, when gold opened at 1829, if you told me back then, that the 10-year note would have moved from 1.25% to 3.5% a couple of days ago. That the dollar would have gone from what, 95 to 105, and yet gold would still be up 1%. I'm not sure I believed you, right? And so I think there's a factor, kind of a strong hands, as they call it, Elijah, in that, I mean, look, if I can figure this out, there are a lot of people smarter than me that obviously can figure this out too. I mean, we know where this is going to go. The Fed has played these rhetorical games on 3 or 4 occasions now since they started QE in 2009, and every single time they end up having to get back in because at the end of the day, they're the bid of last resort in treasuries and mortgage-backed securities and the rest. And you wonder why these QE programs keep getting bigger with each successive one, because every time they step back, they fall behind the curve. And they got to provide even more new cash to try to catch back up. So that's what's coming. And I think that's why gold, silver's down, whatever it is, 5-6% year to date. It might be more than that. But nonetheless, I think that's what the precious metals are sensing, is that point is coming. And when that point comes, it may come a lot quicker than people think. And so we might as well just hold on at this point. And that's why they're hanging in there.
Now, I was just talking to Robert Keynes, and his perspective is that the Fed is really trying to make room to then pivot, right? So the Fed is trying to raise interest rates to a point that they can actually then bring interest rates down. So if they bring interest rates down from where they are right now, that's not that's not a lot of easing. But if they bring interest rates, if they move them up to above 3% and then bring them down to 0, that's a bigger jump there.
Right. And Powell has talked about that. He himself has said that in the past, 6-9 months, that they've got to get above 0, move up from where they had it all through COVID at 0, so that they can turn around and have some room to cut again. Because really, they don't have any other tools besides, moving the Fed funds rate around and QE and maybe constructing other facilities that allows them, to repo cash or reverse repo, cash, or, all the other lending things that they do. So they're very limited in what they can do, these masters of the universe. And so, yeah, that's part of it. But think about the cruelty of that. We're at this point in time. Elijah, the median U.S. income is $44,000. That's it. So think of, your median couple in the U.S. pulling in 88. Hopefully if they own a house, hopefully they refinance, but they're not going to go buy a new house at 6% mortgages now. That's out, and then rent costs are the highest they've ever been. We don't even have to get into gasoline and food and everything else. And, the Fed likes to talk, oh, yes, we look at the JOLTS job openings. There's all kinds of work for people. Really? Where we're going to find out, because all of this margin pressure that employers are feeling, they got to do things. They got to start cutting costs. You're going to start seeing layoffs, right? You're going to start seeing the unemployment rate go up. And what if 50, 75 basis points do about, refinery supply and gasoline prices and diesel prices and all that kind of stuff? Nothing. And so just so the Fed can have wiggle room to cut again, they're just absolutely crushing, 70, 80% of the U.S. population? It's just brutal. It's just, I hope more people figure this out, can see who the true culprits are, the true cause of the problem this time, because every time we go through this cycle, things get worse for average everyday people.
I think it is very important what you mentioned there is that the root cause of all of this, maybe I should say the root cause of a lot of these price increases and economic hardship that we're seeing right now is, it seems like, the increase in the money supply. And we've been pointing this out for many years, that this is the inevitable result of all of this. But it seems like the mainstream media is trying to point to Russia. They're trying to point to, all these other culprits, right, for the increase of prices, capitalism, price gouging and all of that. When at the end of the day, fundamentally, it has to do with there's just more money out there chasing a fewer amount of goods.
Dude, it's Econ 101. You nailed it. Too many dollars chasing too few goods. It's not any more complicated than that. Anybody that took econ in college, that was one of the first things they taught you about macroeconomics. And it is what it is. And like I said, there's nothing about a few Fed funds rate hikes that can put that genie back in the bottle. And I would imagine what's coming next, and maybe some of this will depend on who wins the midterm elections. But what'll come next is some kind of universal basic income. They'll say, well, look, and recognizing, and I'm not saying I'm against it, frankly, because you look at it, and all these people out there that can't make ends meet, they're going to come up with a way. Maybe it's using the Federal Reserve digital currency, whatever the heck they want to call it, to just start greasing people with $1,000 or $2,000 a month to spend on food and all this kind of. Well, that's just, again, they got to do it maybe if it gets that bad. But then that only makes matters worse. You're on the hamster wheel, right? And the bastardization of all this, Elijah, is what really I think people just don't. It's kind of a frog in a pot thing. But Christine Lagarde came out last week as the head of the ECB, and she's trying to play ball, and keep up with the Fed, and try to say how they're going to raise rates and all this stuff. But then she says, but, we got to keep bond buying because if we step away from Portugal, Italy, Greece, and Spain, their sovereign debt markets will collapse. I need a 30-second timeout. What'd you say? So now, 13 years on, the Central Bank of Europe is the buyer of they are the market for sovereign debt. Now, you may think, well, that's their problem. Well, by the time we get rolling again here, Japan is now dumping $60, $70 billion of treasuries a month. The Fed has stepped away. Rates are skyrocketing. How do we know? How does Powell rest comfortably knowing that regular buyers will return to the treasury market too, especially after what we did, with SWIFT and seizing foreign currency reserves of Russia back in March? So when the Fed has to come back in because they can't afford runaway interest rates, there's just no way. The economy would just completely implode. They've got to be the buyer of last resort too. And that's where we are after 13 years of QE. It's gotten that bad. They cannot stop. They just cannot stop or the whole thing implodes. And I'm not sure that's being fully appreciated when they're talking about, the whole discussion is about, austerity or Fed, pulling the reins in a little bit. So.
No, we have a question here from a viewer, and I'll ask this one and then kind of add to it as well with other things that are happening right now. But they're wanting to know, will defaults in many services and companies that produce products caused by deflation and recession contribute to higher prices? For instance, a steel manufacturer going bankrupt because they are over leveraged and now have to shut down. So we're seeing a lot of that where, you're seeing companies with bad numbers coming out, right? Profit numbers and all that. And that's probably going to increase prices as well. But another thing that we're seeing is, food shortages possibly, and a lot of fires and cattle dying and all these disasters happening around the world that just seem like it's going to exacerbate inflation as well. So your take on all that.
Yeah, no, that's absolutely right. That's stagflation. And that's a textbook definition of stagflation you mentioned. Companies going out of business. So there's even less supply with more dollars, right? So again, that creates the inflation. But now you've got stagnant economy. You got companies going out of business. You got people getting laid off because companies, they've got profit margins. And if you lose money quarter after quarter and year after year, you go out of business. Well, maybe not if you're Tesla, but anyway, you get the idea, right? And the food shortage thing is really concerning. I've been on this all year long because I live out here in the Midwest of the U.S. and I've lived here my whole life, so I at least know a little bit about the grain market and farming and that kind of stuff. And with fertilizer costs 4 times higher than they were, anhydrous ammonia, things like that, potash, which you can't get your hands on, fields are just not getting planted. Farmers just looking at it and going, I just can't. It's not worth it. It costs too much. I'm going to run a loss if I go to all this trouble of planting. So again, less supply. And boy, Elijah, I don't know where it is where you are, but it's only June, and all of a sudden it's 90 to 100 degrees all through the Midwest. Dude, if we get into like some kind of drought, like we've had some summers in the past, 2012, I think was the most recent one that was really, really bad. Who knows what's going to happen next? And again, look, why do the Chinese the people's the CCP, and the Politburo and all that kind of stuff. They do everything to mollify the 1.5 billion people and keep them fed and do all that stuff. Why? Because hunger is the biggest driving force of revolution. If you can't feed your family, if you can't, you can't find food to eat, people go crazy. And again, I'd like to think this isn't, possible and where it's headed, but who's to say it isn't? And that's all part of, like I said, a really tenuous situation that we find ourselves in here in 2022.
And the name of your website is TF Metals Report. So obviously, and what we like to do on this channel is kind of offer people an option of, well, how do they prepare for what's ahead? So your perspective on that, I know we've covered this before, but for our new viewers joining us today, how do precious metals help protect finances for what's coming ahead?
Well, historically, they're considered sound money, go back millennia, right? And the problem that we have is a currency problem of money, paper money, currency problem, because the US dollar is backed by nothing. So's the euro, so's the yen, nothing. I mean, just the full faith and credit of the United States. And we can always tax the heck out of our taxpayers to pay off our debts and that kind of stuff. Okay, whatever. Think of it, people should think of it this way. If you and I are going to transact in something, Elijah, say you're going to sell me something, a bushel of wheat, right, that you've grown, and I'm going to I'm going to sell you the bushel of wheat. That's a better example. And you're going to give me in exchange 10 American dollars. Well, the only reason I'm going to take that $10 from you in exchange for my wheat is because I feel like, well, okay, tomorrow it's still going to be worth basically what it's worth today. Okay, that medium of exchange is what facilitates trade, confidence in the currency. So to make that happen in the first place, what has always happened in the going back millennia, the Romans and beyond, is you have actual sound money, gold or silver even longer than gold, because there's an intrinsic underlying value to it. Coming out of World War II, economic devastation everywhere except in the U.S. And so the U.S. backs their currency with gold, as they already had. It was exchangeable for gold. But now that's going to be the standard, the world's reserve currency. Okay? So that now there's a currency that everybody can transact globally in and have confidence that there's value to it. Well, that worked until 1971. And then we wanted guns and butter and the wars and social programs and everything else, and didn't have the gold to back all that money supply we had to grow. And so we closed the gold window, and we've been floating ever since. Okay, so what happens is inevitably, and people heard the stories about the Romans shaving the edges off their coins, to make more, that kind of thing. Inevitably, you go from one side of the pendulum gradually over decades all the way over here to where, now you're totally unbacked to almost to the point where it's worthless. And the whole thing fails. Like you read up on Weimar Germany exactly 100 years ago going through this. And then what happens? Everybody loses confidence and faith in the currency, and that you run into this kind of almost hyperinflation. And then the only way you can bring stability back to the system is by backing the currency with gold again. And the pendulum swings back like this. That is why you own gold, because eventually that's the math is the math. Eventually that's going to happen again. It may happen sooner than later. So if you don't own gold, you don't buy an ETF. Maybe you could buy one of the Sprott ETFs. They actually own gold, but you got to have a whole bunch of those things to be able to get any out. By no means do you want to own like a GLD or something like that. You don't want an unallocated, promissory account at some bank somewhere that says, oh yeah, we got your gold. If you show up, we'll get it to you in 90 days. Don't trust that either. Just get the physical metal. I can vouch for Miles Franklin. I've known Andy Scheckman a long time. I've known you a long time, Elijah. And you just call them up, and you have them ship it directly to you. You put it in a safe place. Don't hold dollars. You own physical metal as a hedge against all this stuff. And that's why you own it.
Now, a lot of people have been looking at what is happening in the economy, what is happening in the stock market, what is happening with inflation. And it's like, this is the perfect environment for gold. It seems like this stagflationary environment, but we don't see dramatic moves in the precious metal prices. Your take on what we've been seeing recently in precious metals. And we have this viewer, Michael, is wanting to know, what do you see happening in the precious metal markets going into the end of the year?
All right. So remember, again, the price is determined by the trading of these futures contracts, primarily in New York, but they have unallocated forwards in London as well. Okay. So we're not really trading actual metal. We're trading these futures contracts. And 3/4 of that trading is done by high frequency trading computers, machines. And they are programmed to take their cues off of the dollar, but more importantly, the level of real interest rates. And what I mean, what's a real interest? An inflation adjusted interest rate. So if your nominal rate on the Treasury is 3%, but inflation is 5%, you're actually losing 2% a year of purchasing power. That's a negative 2% real interest rate. So the key driver is not just inflation as a number, it's the level of that real interest rate. Now, relatively speaking, gold's doing pretty well, right? It's up 1% versus the S&P being down 21. So we got to keep that in mind so far year to date. But what's going to really pop gold again is when it becomes clear that the Fed is never going to be able to get the Fed funds rate above the rate of inflation. That they will cap, they'll stop this hiking thing, they'll have to turn back down before they ever get inflation down. And now you'll have entrenched negative real interest rates, and inflation expectations will start soaring as well. And that's when gold's going to go. And I would just, even the last 2 times this has happened, Elijah, last 2 times the Fed has, played this game. Go back to 2018, late 2018, 10-year note got up to about this level, 3.25%. The stock market crashed 20%. That led to what they call the Powell pivot in December of 18. Okay. Everybody thought the Fed was going to hike all through 19. They started cutting in June of 19. Well, anyway, as that all played out and market figured out that the Fed was full of it, gold went from about 1,200 to nearly 1,600. That's 30 some odd percent in 8 months. Okay. As the curtain was pulled back. And then think back to what happened, with COVID and all that kind of stuff. As 2020 began, the economy's so strong, the Fed might be hiking and all this kind of stuff. By the time with COVID and all the smash down, gold hit a low of 1480. The Fed reverses, turns on the spigots. We're at 2080 by August, 6 months later. So what's that one? 40%? Okay, so it's going to move really, really fast. And that's why it's important now, recognizing that the Fed has no choice. They have to do this again. This is why you use this time now to accumulate metal. Yeah, should it make more sense that gold be rallying just based straight off inflation? Sure, but that's not why the computers buy and sell it. And you need to use this to your advantage, because another Fed flip-flop is coming just as certain as the sun's going to come up in the east again tomorrow. I mean, I can say that without a doubt.
All right. Well, Craig Hemke, we really appreciate your time today. Where can our viewers find you if they're interested in learning more?
At my site, this TF Metals Report, I do analysis every day. And mainly what I do is to try to keep track of price so that, if you're thinking about buying 20 silver eagles, 20 ounces of silver, and because I'm, a little bearish at the moment and think it might break down a little further, and you wait a couple of weeks and you can buy it $1 cheaper, well, I just saved you $20. And the things, like my site's only $15 a month. But look, the most important thing, far more important than what I do on a daily basis, is the community of people on my site from around the world of all political stripes. You're going to learn a lot more from them than you will from me, probably. And look, we need community. We need to help each other out. I just keep coming back to this. This is a real perilous time that we're in the back half of the year and into next year. And you can't just be one man as an island. You got to know your physical neighbors. I look out this window right here. I know my neighbors. I know we can help each other out if we need to. But you've got to also have, a net work of people that you can trust that will help you, alert you to things that are going on that maybe you didn't know about. So that's probably where the real value is the site. And so that's a long rambling answer, Elijah, but wherever you can find that community, I urge you to become a part of it, because again, this is some pretty tough times ahead.
All right. Well, Craig, we really appreciate you sharing your insights today. Thank you so much. Any last thoughts before we let you go?
Can you cool it off? Can it be fall yet? I got 2 more months of like 100-degree weather ahead of me, Elijah, and I'm not excited about it. So anything you can do to cool it off, I'd appreciate it.
Well, I live in Arizona, so I don't know if I can help you there.
But it's a dry heat, Elijah.
Exactly. Well, Craig, thank you so much, and look forward to having you on again soon. Thank you so much, and God bless.
All right, pal. All the best.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.